Hey, Chris Duff over at Serious Land Capital, vacant land funding partner. I was having an update meeting with my partners yesterday, and even to start the year, just figuring out how our marketing efforts have started to pay off. And yeah, it's a big plane to get off the runway. You're not going to get overnight results, but we have started to see a trickle up in leads. Probably the best week of leads we've had since before Thanksgiving. I'm not diving into the data, but just my sense of it. And not too surprising this time of year, but good to see that, hey, we're really kind of pushing all cylinders here and just trying to be also more open for where the industry might be headed in certain directions here. Of course, our bread and butter is going to be flips, ideally larger sized ones whenever possible, though trying to push more into the value add opportunities. And one property I might have commented on earlier this week, I know I reviewed it on the live, is a 30 plus acre piece in Louisiana that seems to be ripe for possible minor subdivision. And we had a very knowledgeable broker head out there, review everything, and it looks like it might be a pretty penny to invest further into the property. Really prepare it for just turnkey build sites for residential buyers here. But, he really understood our focus as faster turnover land investors, and that, sometimes you have to weigh, okay, are we, really going to put extra funds into this deal that's already expensive in order to potentially move this one faster? So, we're internally diligencing this deal as quickly as we can here, but it's one that I thought we might be able to pull off an as-is subdivide and still have room on it. But in terms of a days on market approach, it seems that the numbers will still be in our favor, perhaps even more in our favor in terms of percentage spread on the deal compared to if we had just tried to do minimal improvements or just a straight up survey and then just try to move them as is. So, given our experience, we're just more open and just proving out our track record at higher value deals. We're more open to potentially pursuing these even that might have larger initial capital requirements associated with them. And that's the thing too, is we've been bit hard in the past before. I know a lot of folks will try to pursue higher value deals, north of 100, 150 plus purchase price, and be okay with less spread for a potential conservative sales price. Of course, if you're just trying to double close, who cares? Doesn't matter. But when you're trying to flip by purchasing the property outright, we've found that we've actually trended towards being more conservative in terms of percentage spread between the purchase price and the anticipated sales price, just because naturally your buyer pool is going to diminish for most properties that are above, 200, 250,000 on the market, especially if they're not just an incredibly rare, valuable piece of land, like, oceanfront on the Atlantic or Pacific, what have you. But those are few and far between, and rarely come up from a flip perspective. The owners are rarely pushed in that type of direction. So you really can't count on something like that showing up. Usually that there's going to be a bit more hair on the properties. You're going to have to be more creative with figuring out the value add. So that's just to give you a very recent example of what we're trying to pursue here. And I'm not trying to focus as much on the outputs of the business. The rough guidelines I'd like to get us for this year is approximately $1 million minimum in anticipated revenue for deals monthly. So, buying in terms of liquidity out, and maybe about half that, maybe a little bit more, depending on what the particulars are for the deal there. But I know I can't control that all the time. And if I am focused on the outputs, that might bias me towards making improper decisions from an investment perspective just to hit those perceived revenue goals. So instead, focusing on the inputs, I'm just going lead gen as much as possible, tightening up our sales cycle, and understanding that, we've been in this business for years. It's oftentimes lumpy. Some weeks you might get 5 strong fundable leads. Sometimes you'll get 0. We try to smooth that curve out as much as possible, but that's just the nature of this business, and just understanding as long as you stay consistent, more is going to come your way. Beyond that, there's a couple other avenues that we think, okay, where's this industry heading? I'm sure you've seen more recent marketing, what Clint Turner's done in his business. Extremely savvy land investor. I've learned a lot from him, and I know he backed out of the education space for quite a while, coming back now with those messy title deals, similar to what Logan Fulmer will pursue aggressively here. And while I think our team is set up from our deeper legal internal knowledge and just willingness to dive into hairy problems, the sourcing and acquisition side is obviously quite time consuming. And it's not like, Clint or Logan try to hide that legwork. There's a reason there's so much alpha in those deals, because they're hard to perform. Us looking at, our model, okay, we're already so time strapped anyway. Are we really going to try to pursue that in addition to everything else that we have going on? Standard funding business, trying to launch a software and pursuing other value add deals too. It's just not realistic at the moment. But because we have the capital and the legal expertise to help take some of these to the finish line, especially some of these higher value ones, capital still potentially going to be required. So as the land investing industry moves closer towards, pursuing these deals more regularly, inevitably there's going to be some capital shortfalls, and or just legal tie-ups where, folks might not want to, spend the time to figure it out internally, or just look for, those of us that can provide the capital as well as the ability to figure out the title related issues, and potentially invest in some of those deals in our more traditional funding models. So it's just figuring out, okay, where can we see where the industry is going, and how do we adapt that into our model as well? And we have worked with nastier title issues, not quite some of these that are routine undivided interest where we're really having to try to close without title and so forth. But, we have enough wherewithal to be able to figure that piece out, just given our internal legal team's experience. So that's just something else that I was kind of turning around. We're also investigating, trying to buy some notes at significant discounts to try to build up a note portfolio potentially. That's not going to be a primary focus of ours, but we're more open to the opportunity if the pricing is appropriate, and us just understanding the underlying assets more and diligencing the folks that are buying it into the properties and financing them out with our various kind of internal tools for assessing creditworthiness and so forth. So that's another avenue that we're just more open towards. Again, you just have to kind of continue to evolve and grow within the industry. And just wanted to share a couple of the very recent updates that we've had even over the past few days here. And, so far, this Louisiana Subdivide deal, and there's a couple other larger rural tracts that we're looking at for this month. If we're looking at an output of $1 million in potential revenue on the table, we're probably already approaching about $2 million, even for the month of January coming out of the holidays. So that is, hitting again our loose goal here. Don't focus on the outputs, focus on the inputs, but as a very light North Star guideline of what we're trying to go after. That's just keeping that in mind to understand, okay, our efforts seem to be paying off in the right direction here, and incentives are still aligned. Again, if you want funding, seriousland.capital, or our zero cost deal reviews, land daily diligence. Been a bigger bump in the growth of that group, probably the biggest bump over the past 4 months. Been exciting to see, and more additional positive feedback. Beyond that, landpricer.ai for the simple and accurate way to price land. And again, check out Dave Deniston's Unconference in August 2025. As long as you're making 6 figures in revenue, you can apply and get in. and then use my last name, DUFF, all lowercase, for $200 off your ticket. Again, only large land conference that I'm going to this year. Hope to see you there. Bye.